Hello and welcome to the new accounting podcast on how to actually look for balance day adjustment errors. Now you're going to get a question based on your practical assessment, which is based on looking at errors in balance day adjustments. Now you should already know those balance day adjustments from last year, where we looked at accrued expenses, accrued revenues, prepaid expenses, and unearned revenues. And then there'll be additional ones, for example, depreciation, which you learnt in term 3 in year 11. And also you'll be doing a statement of profit or loss and statement of financial position, which is fully classified. So I'll be going into how to complete one of those in the next vodcast. So I'm going to break the vodcast up into 3 parts. 1, looking at the journals and correcting them. 2, doing the statement of profit or loss with the adjustments. And 3, completing a statement of financial position with your adjustments. So you're going to get some questions in the exam which is looking like the questions which are actually in your text in your student workbook, and that is a list of balance day adjustments, a list of partially completed journal entries which you must identify errors, and then also a trial balance in which none of the actual corrections have been done. From there you'll have to correct the errors, complete the statement of profit or loss, and complete the statement of financial position. Now the errors to be identified and corrected: there will be calculation errors in your journals. There will be incorrect journals actually done. So for example, the debit and the credit might be wrong, and there's some journals which won't be completed at all. What you're going to have to do is identify the error, clearly mark it, and explain why it is an error, for example, wrong calculation, and then obviously correct it in the spreadsheet. So the first ones we are going to be looking at are obviously these ones here, which are partially done. Now all of your journals are actually in your balance day adjustments student workbook, which is on page 15 of the workbook, which goes through all the journals that you'll need to obviously know for the exam, and also the types of balance day adjustments. So the first one, this one here, is looking at doing a stock take. Now as we know, a stock take is basically a calculation of how much stock you have at the end of the financial year and compare it to what you actually have in your computer records. Now you can see here the stock take actually reveals $17,000. So you're comparing this amount here to what you've got actually in your trial balance. Now we've got in our trial balance for inventories here of $17,500. So the difference is obviously $500, which is the difference between what is written in your statement of in your trial balance and also what you actually calculated at the stock take. So this amount here, the error is not actually the journal entries or the actual accounts itself, it is a calculation error. So it should be 500, not 1500. Now the way we actually calculate the 500 is the difference between what we've got written in our books as per the trial balance, which is 17,500, less what you've actually got in your actual stock take itself, which said 17,000. So we must adjust this by 500, not 1500. So we are going to just over here we'll write our error, and we're going to put calculation error should be $500, not 1500. And so we are just going to adjust this by $500. Okay, the next one here is writing off of a bad debt. Now there are 2 parts to writing off a bad debt. One is to actually write off the doubtful debts itself to the provision account, and that information you'll actually find here in your trial balance. So if we look for bad debts, we have to write this $280 off to the provision for doubtful debts. Okay, so again there is a calculation error here. This should be 280, not 500. So we are going to put error here, and we are going to put 280, not 500. Okay, and then the next part here is to actually do the calculation of the provision accounts. And it says here to be 2% of accounts receivable. So more than likely this amount will be wrong as well. So the first thing you need to do is to create a T-Ledger account. Okay, and this amount here is basically this $280. Okay, and the next thing we need to work out is the closing balance. Now the closing balance represents 2% of accounts receivable. So we're going to go equals, and we're going to go 0.002 for 2% and times that by how much is in the trial balance for accounts receivable, which is $18,000. So we are going to have a closing balance here of $360. So if we add these up, and take them away, because as we know both debit and credit side must equal, our bad and doubtful debts expense is going to be the $440. Okay, so this one here is basically, it has got two errors here. One is the actual amount, and also there is these are around the wrong way. So we're going to put here error, calculation error, should be $440, and also journal debits and credits wrong. Okay, so we are going to cut these out. So we're going to put equals $440, and over here we're going to put doubtful debts expense, and then over here we're going to put provision. Okay, so you must always check the actual amounts, and also whether the accounts are on the right side, i.e. the debits and credits. Now the next one we need to obviously look at is this insurance. Now it says here it was paid on the 1st of the 1st 2020. Now as we know, with a prepaid expense, you only have in the insurance account what is up to that financial year. So we've got to take out the next financial year's amount to the provision for, to the prepaid expense. So if we look on our trial balance, we've got in insurance, we've got $1,800. Okay, so it's from the 1st of the 1st, and it is for 12 months. So to work out how much it is for a month, we must look for that how much, and divide that by 12, and it equals 150 a month. So therefore for 6 months we must have 150 times 6, okay, which equals $900. Alright, so that is correct. So the error is not in the actual calculation, it's actually in the way this is actually presented. So you should have prepaid expense first and then the insurance. So over here we're just going to put error, journal journal debit and credit wrong. Okay, and then it's just a matter of doing the rest of the journal, so that being the depreciation for the diminishing balance and also the straight line. We've got some accrued expenses here, okay, and also we've got some prepaid expenses here as well, and also an accrued revenue. So we're going to do those now. So we're going to do depreciation first. And that will be for furniture, and then the accumulated depreciation for furniture as well. Okay, and it's 20% straight line, so we need to obviously get the furniture account, go to how much our furniture is, 28,000, and then times that by 0.2, and then times that by 1 divided by 12 to get a monthly figure. And then we're just going to put a BDA, balance day adjustment, at the end for our narration. Okay, and so the next one we're going to do is the delivery vehicles. Okay, now the calculation different for that is basically open our brackets, and we're going to get our delivery vehicles, and we got to minus our accumulated depreciation on it, and then times that by the 0.25, and then times that by 1 divided by 12 to get 1 month. And again, same narration. Okay, now the following expenses have not been paid. Now the key words here have not been paid. So that basically represents that you've got an accrued expense because we've got expenses here. Okay, so we've got wages and salaries. You've got $3,000. You've got sales staff bonus of $1,500, and then you've got legal expenses of $2,500, and then accrued expenses which is the addition of the two together, or the three, sorry. And same thing again, balance day adjustment. Now the next one, it says we have signed a contract to rent part of the building. The accounting firm pays rent in advance. Okay, so basically what we've got here is a prepaid expense. Okay, because the key word here being advance, and also the key word being here rent, which is basically an expense. So we got to put prepaid expense, and then we've got rent expense. Okay, so we've got here sign a contract on the 1st of the 10th. Okay, so you've got to work out how many months that we've got to calculate this up to. So we've got October, November, December, January, February, March, April, May, June. So you've got 9 months. Okay, so we've got to take out 3 months worth to put into the prepaid expense. So again, we find how much our rent is. sorry, I made a mistake here. We are earning the rent, so it is an unearned revenue. Okay, and we've got rent revenue here. Okay, so we've got, take 3 months worth of this rent out as unearned revenue. So $9,000 times 3 divided by 12. Okay, so we're taking out $2,250 worth of rent. And again, balance day adjustment. Okay, the reason I've worked out it was an unearned revenue, sorry for the mistake, is we've got actually a rent received over here of $9,000, okay, which basically represents the contract that these people have actually signed to us, and they are paying us. Okay, it also says we received 2% commission of net sales. Okay, so net sales basically represents your sales less your sales returns, and that is an accrued revenue because the keyword here being outstanding. So we are going to put over here accrued revenue, and then you've got commission revenue. Okay, so we've got accrued revenue of equals. Open your brackets, go to your trial balance, and we'll find sales. Take off your sales returns, close your brackets, times by 0.025. And again, BDA for your narration. Okay, so you can see here that we've actually got accumulation of just about every type of balance day adjustment you can actually have. So if you look in your workbook, you can have a prepaid expense, which we have, okay, accrued expense, which we have here. We've got an unearned revenue, an accrued revenue, we've got depreciation, and also your bad debts, your provision for bad debts as well. So you're going to have to know all of these ones for the exam. Okay, so next vodcast we'll be looking at obviously transferring these amounts over to the trial balance, making the adjustments, and also determining whether they are actually going in the statement of profit or loss or in the statement of financial position, and from there putting those in the respective tabs here along the bottom. Thank you.